Hello, fellow rebel capitalists. Hope you're well. It's the big day, the Fed announcement. Are they going to remain hawkish or are they going to backpedal a little bit and try to have a more dovish tone to support the stock market? I was just talking to Josh, and he believes that they're going to remain hawkish because there's been a lot of articles coming out this morning about how Biden is pissed at Powell. I'm paraphrasing, of course, but how Biden wants Powell to do anything he can to stop inflation. And if you guys saw that tweet I sent out the other day when Biden called that reporter a stupid SOB, you can tell that the administration and Biden, they're emotional about this. They're losing their cool. They realize that inflation most likely is going to either make them or break them. And so they need that to go away ASAP. And I think they'd actually choose uh, inflation going down, even if it meant the stock market collapsing. Now, how fast, we'll have to see how it plays out. But I think that's kind of what's going on behind the scenes right now. And then I think that's why we eventually get to price controls, because I think they're going to have to kind of, cry mercy and wave the white flag if the stock market goes down by more than 20 or 25%, support it. And then, what do you do with inflation? Well, you come out with price controls. I think that's kind of the game plan. That's my base case, if you will. But let's get over to CNBC. See if we can find out what is going on. Shoot, where is it here? Okay, so what news do we have? Federal Reserve, real-time updates. Okay, let's go to that. Oh, no, this is okay. I'm sorry. This is when the Fed, when Jerome Powell comes out with his announcement. So that's going to be in a half an hour here. But they should have a quick look at the markets. No, 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 no. They're supposed to have the Fed decision. I assume this means that they did not raise rates. Let's see here. With the Fed expected to signal it will tighten monetary policy this year to stave off surge in inflation, Credit Suisse strategists searched for stock what to expect from the Fed. So Mark Cabana of Bank of America saying we don't expect them to sound dovish. We don't think the Fed is going to come out and tell the markets it's wrong for pricing in 4 rate hikes this year. Okay, so here's where I think could be a huge opportunity in gold. And if I was a trader, which I'm not, I'd be buying gold miners right now, because I think this is one of those events where the entire market is all on one side of the bus, right? So if Powell comes out and if he remains hawkish, then I think a lot of that is priced into the market. But if he takes a dovish stance, I don't think that's priced in at all. And that's when I think gold could just go through the roof. Dollar, I don't know what it's at now. Maybe, where's it at, Josh? Maybe 96 or something. I think dollar, maybe goes down to 95 or does something like that. I think that's where the market could be offside. So if I was a trader, which I'm not, that would be the opportunity that I would look for. It just goes to show you how the entire market is kind of on one side of the boat, assuming that Jerome Powell will maintain his hawkish stance. Now, I don't know that he would confirm that or say the market isn't wrong for pricing in 4 rate hikes. I don't know if he'd go that far. If he goes that far, then you could see the opposite, where we continue with definitely with the market volatility, but maybe that volatility to the downside. All right, so let me go back to real-time updates. Well, I'm looking for the real-time update, and I don't see it. Let's go back to their homepage. I thought that they were gonna make the announcement at, 2 p.m. Eastern. Oh, so well, let's check that out. So Josh is saying the market is skyrocketing right now. Usually it's these insiders or it's people kind of buying the rumor, sell the fact type thing. This is weird because again, I'm not a trader. I don't get into this, but I find this stuff just absolutely fascinating. So let's see. Let's go to a 1-day chart of the market, see what it's doing. Oh wow, yeah, it just really spiked higher, didn't it? But then it came and lapsed down, spiked up to its high of the day, but then it came back down right away. So bottom line here, guys, is we're seeing a tremendous amount of volatility in the intraday market, not just with from day to day, but this takes us back to the intraday volatility we saw on Monday and Tuesday. Now then it was kind of on the downside. Here it's on the upside, but what a wild ride. Let me go to the candlesticks. Yeah. So this is a 1-minute chart. Let's see. Boy, it just 1 minute it goes up. Man, I don't see how you could trade this effective. I mean, just 1 minute it's up, next minute it's down. Yeah, look at that 5-minute candlestick. It just went way up to the high of the day and then just came all the way back down to its I don't know if you want to call that a support line. I'm not sure how the 5-minute candlesticks uh, really play out. I guess it would be the same type of patterns that you would see if you were day trading as if you were swing trading. That's just my guess. I don't know much about technical analysis, but I would imagine that the same patterns would hold true in shorter time frames. So let's go ahead and refresh here. Yeah, I think what would be the best use of our time is if we oh, now it's back up. My goodness, just all over the place. Wow. Yeah, now it's really moving. So I think we're going to see tremendous just swings up, down in the next, call it 20 minutes. So I think what would be the best use of our time is if we quickly review kind of the position the Fed is in and why this meeting is so important, why Powell's statement is so important. And, usually it's just kind of he comes out and says, "Yep, no rate hike, no big deal." And then the market moves on. It's pretty much nothing to see here. But today we've seen the volatility just skyrocket in the market over the last few days. And I also want to point out that since November, when they announced tapering, the stock market is down substantially. Actually, let me go to that chart. That may be helpful. Okay, so Josh just said, where did you find that, Josh? Okay, so Josh just said that their statement did come out, and it is that they're going to keep rates at 0%, but they are committed to their existing taper program. Did I get that right, Josh? Okay, so that's basically the main takeaway here is they're keeping rates at 0, or they're keeping them in the range of 0 to 25 basis points. So no rate hike today. That doesn't really come as a surprise. So I think the big news is going to be in Jerome Powell's statement. I guess that's maybe why the market, that's probably why we saw the market volatility go up, Josh, is because that statement just came out and we were kind of behind. I don't have like a Bloomberg terminal or anything. So I'm just on CNBC's homepage. So yeah, that's probably what happened. But again, let's go back and look at the market in November. So let's say 6-month chart. And in November, when they made the announcement for tapering, right around the third, so the market was, call it 36, and this is the Dow, by the way, 3665. And since they announced tapering, and since they started to taper right around here, the middle of November, The market's down. Oh boy, call it 150, 100 and or excuse me, 1,000. We'll just call it 1,750 points, roughly, something like that. So, or I'm sorry, that's 35. I'm sorry, it's about maybe 1,200 points. So the Dow's down about 1,200 points since they started the tapering process. So this shows us that, and mind you, they haven't even gotten down to zero. They haven't even increased interest rate. They haven't even started quantitative tightening. So if the market is this volatile over them just taking quantitative easing from 120 billion down to whatever it is they're doing now, let's call it 50 billion a month, um, from 120 billion down to 50 billion a month. I mean, let's remember they're still doing quantitative easing. It's just they're doing less quantitative easing, and the market seems to be freaking out as a result. And so, my goodness, what happens when you get to zero? What happens when you raise rates? What happens if you do quantitative tightening? That's why the Fed announcement, Jerome Powell's statement, or I don't know if he does a press conference at 2:30 Eastern time, is so significant. So I think that kind of tees it up for the next live stream, Josh. What we'll do is go ahead and leave it there, and then we'll come back and do another live stream here in about 15 minutes to hear what Jerome Powell says in real time. So, guys, enjoy the rest of your afternoon. Always stand up for freedom, liberty, free market capitalism.